Today, folks, the honeymoon phase is over. Don't call me Jerome Powell, baby. Call me Melania Trump, because now we know what it's like to live with the guy. And here we are talking about investing as I put over $18,000 in the market just since the beginning of April. Trying to catch the dippity dip that keeps dipping, and we're still dippity dipping. But we're going to talk about the adjustments I made on my spreadsheet because I'm sorry I misappropriated the numbers, so the accounting wasn't correct. I'm actually somehow still green because of how long I've been investing, but overall I'm still down like 30K, and we'll talk about it in full transparency as you know. I try to do the best that I can for you guys here, but if you're on a path to financial independence, if you want a little bit of humor today on your path to that journey, let's do it together. Hit that subscribe button because Elon Musk's brother, Kimball Musk, God rest his, hilarity here that he's not getting in too much shit being at arm's length of Elon, while Elon's at arm's length of Trump and can't say as much. He's been retweeting and just battering the crap out of this tariff policy. And it's, whoo, baby, it's funny. He retweeted Bill Ackman's thing saying, correction, we are on track to eliminate capital gains in 2025. There are better approaches to reducing taxes than wiping out gains. This was one of the funniest jokes that I've seen going around, that Trump was going to cut capital gains tax. We didn't realize that he was just going to get rid of our capital gains on top of them. He's been retweeting a lot of things like why markets are crashing. They lied about the tariffs being targeted and reciprocal. None of that math makes sense, and it lacks intellectual rigor. When Trump said 10% on all nations, the futures rose 1.5% on that news. That win would have raised the $600 billion he wanted. Let's maybe read into this a little bit more in depthly and encourage companies to reshore. But instead, he took out that effing R billboard of scattered brained math that was arbitrary and nonsensical. This is why the markets are crashing, because whoever the F thought that was a good idea is either, an R word or purposely F'd Trump. So that his entire agenda is neutered. These are real people, by the way. These are people that are worth like billions of dollars that are really quoting this stuff, which is just crazy to me. Celebrating causing China's stock market to go down by causing our own stock market to go down. Maybe this is why Trump brought back the R word, and then obviously quoting Trump, trying to gloat a little bit here on these tariffs, and inflation, which is just insane. I love Dr. Parik Patel, one of my favorite comedians in the financial space. When Trump said he was going to get rid of those capital gains tax, I thought he was going to get rid of the tax part, not the capital gain part, as we just mentioned. Literally with tariffs are bad, whether they come from socialist or the far right. And this is crazy that this is Elon's brother, right? Another Bill Ackman quote here. To state the obvious, it does not help our countries and our president's negotiating position to be trying to strike a deal while our market is collapsing. Whoever is recommending that idea to the president should be fired now. A PhD, this is an Elon Musk quote here too. He's even like retweeting Elon. A PhD in econ from Harvard is a bad thing, not a good thing, results in the ego brain's number one problem. I wonder if this is all just related to Trump. Now, this is real power. You will not go very far in your life. China retaliates against tariffs by putting worse fortunes into cookies. That's hilarious. Who would have thought that Trump was actually the most high tax American president in generations? Through his tariff strategy, Trump has implemented a structural permanent tax on American consumers. Even if he is successful in bringing jobs onshore through the tariff tax, prices will remain high, and the tax on consumption will remain the form of higher prices because we are simply not as good at making all things. A tax on consumption also means less consumption, which means less jobs, which in turn leads to less consumption and then even less jobs. America has incredible strengths. We should play to the strengths and not be forced to play to our weaknesses. I mean, this is just wild to me, and it just goes on and on. I highly recommend just kind of scrolling through these billionaires and what they're tweeting and how they're tweeting, because it's a fine reminder you just can't be on Trump's side with this policy. It's delusional, and it's a game of chicken, and all China has to do is say, hey, if both our stock markets are going to crash, let it crash. Jobs are going to get lost. The question is who can hold out the longest, because again, Trump is literally playing a game of Russian roulette. People are going to stand up against this eventually, and when you got this much hate, this is going to make or break his presidency. And I hope people are seeing it. I don't care about U.S. politics that much. I don't care left, right. I think they both suck. Same in Canada. It's just they don't show up and do your job. They're not putting food on the table. But when they start interrupting the food that you're trying to work to put on your table, whoo, baby, get ready for a ride. And I feel really bad if that's you. Obviously, my heart goes out to anybody that is being inflicted by this absolute, just crude way of implementing horrible horrible policies. But how is it affecting me? Well, I've been draining my accounts because, as mentioned, I leave money aside for moments like this to try and take advantage of markets like this. And how far this goes, how low it goes, the biggest conversation I've had with people, and thanks to everyone that's booked one-on-ones over the last week, talked to many people in retirement, some younger folks, and go to kylelivingston.com, links in the description below. And the number one conversation is try to stop predicting the future. The second you think you know what's going to happen tomorrow, I would fire you as a financial advisor, because all you can do is implement a cost average strategy to get the best average price of the moment that we're living in over a period of time during, that investment strategy, whether it be 3 months, 6 months. For me, I'm an aggressive influencer clown. Obviously, I'm not offering financial advice here by any metric. These are just opinions of my own. But I just, I get a bit aggressive. I get a bit giddy when there's like extreme uncertainty and fear in the market. And it's like walking into my favorite store in the world and seeing 10, 20% discounts. And am I going to buy as much as I can? Yeah. Could it go materially lower? Sure. Am I still employed? Thank God for the time being, and hope it lasts. And, as my paychecks come around, I'll keep investing for sure. But man, we've given up all the gains that we've had. I'm glad I didn't get too crazy today, because the market started to bounce back and I was like, do I still want to buy just a bit more on the rebound? But I'm like, let's wait. I've invested so much. Let's just take a breath. Let's see what the next few days look like, and then we'll go from there. It's just wild to think the trillions of dollars that have pumped in and out of this market. That 90-day pause that I think it was what Goldman Sachs accidentally released. And the only way I can think it was released was because they were pre-making statements they think were going to happen, and somehow somebody just accidentally leaked it. Because, we've seen trillions of dollars move in and out of the market for the first time like this ever in history. And that isn't a joke. Literally the movements the S&P 500 has been making has never seen this kind of volatility ever. But again, there's never been this kind of value or money like this in the market, right? So overall, I've actually had to adjust my portfolio correctly. And I realized I accidentally clicked a few numbers that were wrong, because when I said I was down $30,000, I think I am, because I think the peak of my portfolio was closer to 380, 390. I am down quite materially, but I'm not down as much as I thought. I'm actually up 1.1%. And the reason that I didn't think it made sense last time I showed my spreadsheet was because in my corporate account, I've had this account for years, and it's where the lump sum of my S&P 500 shares sit, and I'm still up 17% in this position. Like, it's a material amount that I am up. And I'm like, I'm not that much down on all these other stocks. In fact, in my TFSA, I'm mostly flat, which is why I've been showing you the individual accounts, because it's a lot more accurate. So I went through and I did the proper adjustments. And if I'm not mistaken, this is more appropriately for where my portfolio sits today. Now, I think because I've traded a few stocks in and out, this probably doesn't reflect the total capital gains, because traded Tesla, I've traded a bunch of stocks over the last year or two even that aren't reflected in the capital gains. But for where my shares sit currently, as they've solidified, these are the shares I'm holding without any selling or moving of anything. This should be the accurate screen cap of that. So we're sitting at about 361K, still materially down from those highs. I don't know, like I said, I'm very happy with my positioning here, and I'm shocked that some of my stocks like Take-Two have held up as well. They've held up, so I'm grateful that there's been some stability and I'm still collecting some income. But what a lot of people are looking at right now is the price to earnings collapse. I've been seeing a lot of people throw out, and I've been doing it as well, where we finally sit at a teens forward PE on the S&P 500. And this is not a good rendition, in my opinion right now, of where the market calculatably sits for earnings, right? Because a PE is kind of a really mysterious number of earnings versus what I'm paying per share, which means if the earnings never change into the future, it would take me like 19 years to get a full rate of return out of the S&P 500. But that doesn't conclude drops or growth periods that we could experience in the next 1 or 2 years, because if earnings materially get hit and we actually start seeing a collapse and an adjustment in guidance, this forward PE could dramatically jump back up to like a 25 or 30 with the current valuations, which would lead to further drops in the market. So don't get too caught up. And what's crazy is we look at the year to date on the S&P 500 here. Look at the tech wreck. I can't get over. Apple's down almost 30%. Nvidia, the darling of the AI boom, down 25%. These are haircuts unlike anything we've seen since virtually the pandemic. I don't even think the pandemic was this harsh to some extent with some of these stocks as quickly as this has happened. It's surprising that Google and Meta are only down 20 and 11% respectively, but it's because Meta ran mid-year here, and it's still down like probably 20 or 30 from those highs. But people are clearly still hiding out in things like Berkshire that have started to correct. But on the year to date, it's just fun seeing the spattered performance of tech companies just getting right on the Canadian side of the border. It's shocking to see year to date. I mean, things like Enbridge are still holding up okay. Kind of, again, everything's kind of selling off. It's just we're scaling out to try and give you that broad view of where we're seeing the most material hits. Banks have corrected again. The Canadian National here, the railways getting hit. I mean, wow, just what a market to be in right now. A lot of people have been asking me, like, how I've been coming up with this cash, because I said I ran out of cash, right? And I keep saying that, but the reality is like I said, I have a few emergency funds. The stock market emergency fund, which is liquidated, that's gone. I also have my, housing account emergency fund, the joint account between the wife and I. That account I will never touch. That has 6 months of housing expenses. So like that I cannot touch regardless, because it's a definite no. But what I do have is in all of my bank accounts, my corporate account with Royal Bank, my Canadian bank account, is I am almost not forced, but I have to hold minimums in these accounts or I get charged a monthly fee, what I call a broke person surcharge. And I have started to wean my accounts down to those broke person surcharge levels. And that's why I said I was out of money, because typically I will not draw against these levels that are required. Now, to put it in an example, in my US corporate account, I have to have a minimum of $4,000 or I get charged $10 a month. I am now down to $4,000. Now, I could easily pull 2 or 3 of those $1,000 out and not worry about it and invest it and hope that I make a way higher return than the $120 it's going to cost me over the year. That's kind of where I'm at, and that's why I've been kind of coming up with the little bits of extra money I've been investing over the last day or two. But even in my Scotiabank account, like the account that I have, they'll charge me like $12 a month if I don't keep a minimum of $3,000. So I pulled another $2,000 out of this account because I had 4 in it. Now I'm down to 2. And yeah, I'm draining these accounts quite a bit lower than I would like to, but I can't help myself because I see the money that's there. I don't need it. I still have my 6 to 12 month emergency, even with the joint account and the money I have left in these accounts. So why not, just invest the little bits where it makes sense for me to do so? Like, obviously I have to keep operational expenses still there and like taxes expenses. Like, I mean, my accounts have a lot more money in it than even that. It's just I have to use them for my business. So I'm not going to like pull all that out or, reduce like the tax money that I owe the government. I can't spend the government's money. That money has to be protected. But like I said, it's just like you can always find a few more bucks if you're in a position like I am. So I said, screw it. Let me pay the $12 a month. I mean, a few paychecks later, this will be re-topped up. Probably won't even pay, like I'll pay maybe $12 for the month by the time I get my next paycheck anyways. We'll see what happens, right? So this is just kind of where I'm at, how I'm kind of coming up with the capital to keep investing where I'm at. And like I said, I don't need to be doing this. I could sit idly at this point. I've invested far by God enough money, but I get crazy in times like this because, again, when you use compound calculation and presuming that this is a manufactured crash that is causing a really, if anything, a healthy correction that's probably needed, when we go back into a normalized markets where earnings can then thus stabilize, whether that's 1 year, 2 year, 3, eventually it's going to happen because Trump's policies will eventually either get reverted or people will stand up enough against the government that they won't have a choice. I mean, I hope it doesn't get to that level, but when you look at billionaires, especially in his close circle, starting to turn on him, we'll see where we end up. But I always believe that the markets act like a drama queen, and you have to understand that it's never as bad as you think it is, and it's probably never as good as you think it is. And you're always going to find yourself like Goldilocks somewhere in that just right zone. That's where we're going to end up again. And right now, I think we're just fluctuating, into the over-exaggerative, this is horrible, the whole world's falling apart kind of zone. And I still think most of these companies, their futures are intact. I don't think they're collapsing. Could they get hit because of tariffs to some extent? Some of them, sure, that's going to happen. But again, we'll see how this all levels out in the long run, but just relax, take a breath. Don't try and predict the future. Just cost average, do what you can with whatever you can make, and just realize that as the market corrects, if we go back and you believe the future is still bright, the dollars you're investing today could compound exponentially. Again, think if we just go back to all-time highs like we did from the pandemic from 2022, I just want to show you the variable difference here because let's say where the market's at right now at 463 on the VOO. If we go back down to 463 and you're buying here right now, right around this price, I mean, you could easily see anywhere from, an 18, 20% return if we go back to all-time highs. But like, think of the difference here. If you bought the peak of 2022 to the peak of basically 2025, you would have saw a 30% return. But any money you were investing at the bottom of 2022, I mean, you saw a 70% return. Again, you can only get the average by buying the tops and bottoms, but that's why I get so aggressive when we're in these periods down here. Because when we get through it, the money that you invested has exponentially more value than it did back here. So just take that into consideration. I'll pass the question off to you guys, though. I'd love to know what you think about the markets, how you're handling this. I mean, like I said, I'm in a privileged position to be able to still buy stocks, but I'm running out of that privilege. Like, I burned through a lot of it, but I'm thankful that I had it there for moments just like this. But let me know what you think in that comment section below.